Hey friend, welcome back to the 10-10 book club sharing, and this is the part 2. So it will be more like a Q&A, it will be more like a podcast style where Peter get the question from the floor and answer them real time. Alright, so you'll learn a bit more about his insight and also how the questions that relate to what is currently happening in the market. I believe that you're going to enjoy it. Let's dive into the sharing now.
You mean by
by country in Asia, not export. Don't care which company, but their workers, their product.
Okay. See, that's where the production is. Then look at the last chart. Remember, the manufacturing is always in Asia. That's why you look at it in terms of foundry. 70% actually is by Taiwan alone. So that's where it is fabricated. The wafer is fabricated in Taiwan and exported throughout the world. Likewise for the OSAT, the chip packaging is also concentrated in Taiwan. So if you go purely on export in terms of chips, it's definitely Taiwan. It's a big exporter. But if you go by export of equipments, the high-tech equipments, right? We have base here in Malaysia. Like for example, you have Lim Research here. Right? You have Paradigm, all these things. So Malaysia, we also contribute to world export. So what happens is, say for instance, take Texas Instrument in the US, for instance. They are building a plant in the US, right? They may have placed order from Lim Research, which Lim Research will then build their machines here and then export to the US. So anything to do with manufacturing is still concentrated within the Asia region.
Moving forward for China market will drastically change with the US-China tech Cold War. Use the moving forward.
So not about the slide.
Yeah.
See, it's a very, very long. I'm thinking of the right word. It's a very long cycle industry, right? It's not a normal manufacturing industry, but today you can just put in capex and tomorrow you can start producing. The cycle of tech is very long. So even look at investments, right? To start up a foundry or start up a OSAT, it takes at least 4 or 5 years for you to start a foundry. So it's a very long cycle. That's on one hand. Second is on chip design. It is again a very long process. You may have invested in 5 years, 10 years before you get your first chip. So the reason I point this up is these are not things that can change overnight. There is no miracle that suddenly out of sudden China emerged as the leader in IC design. It doesn't happen that way. So what I'm trying to say is, yes, it will still remain the same even in 2022. And like it or not, my view, that even for the next 5 to 10 years, it will likely remain as this breakdown because it's a very, very long cycle. That's one of the other reasons why China is very way back in terms of technology. It's actually a Chinese issue. No, we Chinese, right? We like fast return. I want to put a capex now. I want to see the return. The best is tomorrow, right? Or even very, very fast. So you can understand that's why Chinese is very strong in manufacturing. Manufacturing very fast, right? You buy your machineries, you produce 1, 2 years later, you see your result. Tech, no. Tech involves putting years and years of investment and capex. It's a very long cycle. Only maybe 10 years later or 15 years later, if you're lucky, you see the result of it, which you see is not what Chinese nature. So that's, you can understand why China private companies are quite reluctant to invest in tech. Whereas look at China, most of the tech investment are driven by the government because entrepreneurs don't want it. I mean, you ask the Chinese to invest 10, 15 years later before I see a result. No, thank you. Whereas for Western, they're more attuned to that. Long investment for them.
So Peter, one question, right? As the total available market of this technology going to grow, in which segment do you see the biggest growth? For example, in foundry, OSAT, automation, machinery, where will grow the most in terms of their in the future?
Now the biggest driver for demand is actually the chipset again. There's 50 billion investment going into it. You can just look at all the major announcements. Texas Instrument will be building massive plants in the US. Samsung will be building plants. TSMC will be building plants there. Who else? Remember the top 5, they're all massive plants. And this roadmap spans until 2024 over the next 12 years. So if you think about it, as all these plants are being built, expanded, the first thing they need, of course, machineries. And look at, again, foundry machineries are dominated by your people, Lim Research and ASML and your applied materials. And then you also need offsite machineries, which are, again, technically, I won't say controlled, they're not monopolized, are dominated. I think that's the word I'm looking for. Like people like Paradigm and Kohu and so on and so forth. So this will be definitely the first, or the growth that you're going to see for the next few years. So a lot of people ask me this question, right? Will the US CHIPS Act benefit Malaysian companies? I said there is really no direct beneficiaries. Because as I mentioned earlier, you look at it, we are not really involved in all these high-end machineries. The closest we are is maybe if for Lim Research machineries, maybe they'll build it in Malaysia. That's the closest correlation we get.
Okay. Peter, there's a question asking about where does ASML category in?
ASML is part under Foundry equipment. Neck to neck, ASML and Applied Materials are neck to neck, always fighting to be the #1 foundry equipment place. Mean to say, the equipment that fabricates wafers. And as I mentioned, these are actually a very, very high end. I would say in the semicon value chain, equipment is actually the highest end of the machineries, of the capabilities. So, under foundry equipment.
And they asked about Opstar and Skychip.
They're ex-Intellers, so I don't know if this is a good platform to talk about it. Well, they are capable local players, right? And if you really think about it, as I mentioned, they're all ex-Intellers. I think one of the first few jobs are also designing chips for Intel. Right? I think what really provides that platform is that you see every chip company have their own, what to call that? What's the word? Sorry. Foundation or their own, I forgot what's the word, structure. See, NVIDIA's own chip architecture, sorry, that's the word before. Intel has own architecture in their chip design. NVIDIA has own architecture. So if you think about it, who else knows better of Intel architecture than Intellers? Right? So it makes sense when Intel want to expand, you can't be doing everything yourself. You have to outsource some of the design. So who else can actually be better to design than people who understand the architecture of Intel chip design? So these are people like your Opstar and Skychips. But they're good. So they expanded from their own capabilities. But to my little understanding, I could be wrong. I think if you look between Opstar and Skychip, the biggest difference between Opstar and Skychip is the intellectual properties. Opstar business model, they don't have intellectual properties. Or at the end, the chip design rights, patents does not belong to Opstar, but to their clients. But Skychip took a very different approach. Skychip owns whatever chip design that they produce. So these are the two biggest differences that I understand from Opstar and Skychip.
All right, Peter, there's a question much more on the investment. Which group of area do you think is lucrative to invest in, especially based on the reasons Semicon stocks drop and outlook?
That's a very good question. Honestly, right? Before I wrote this book, I like technically a lot of companies within the Semicon EMS space. But I think after I see, the good thing about writing book is it really forces you to think, because you have to write. Right? You have really put things into perspective. So the downside to me personally is I'm also managing fund. I'm a fund manager. Suddenly after publishing the book, suddenly the number of companies I like just shrink substantially. Because after you look at the whole structure, the whole industry. Right? What I personally like now, if you take for product owner, we don't have product owners. Right? These are all your global giants. We don't have it in Malaysia. We don't have an Apple equivalent. We don't have a Dyson equivalent here. So that space is out. We talk about IC design. Well, the closer you have people like your Skychips and Opstar, but we don't have the likes of giants like NVIDIA in Malaysia. We don't. Right? Even your IDM, look, we don't have it. So those, unless you invest in the US, right? So if your investment market is out of Malaysia, yeah, I like the IDMs and the fabless, because these are the guys that will continue to be the leaders of the industry. Honestly, if you really think about it, people like Intel, NVIDIA, Qualcomm, Broadcom, I think they've really reached a stage where it's quite hard to challenge them in terms of size. So I like that space. When we talk about OSAT, right? As one thing I mentioned, okay, let's mention Foundry first. Foundry, we are not there. Okay, there's only one guy in Malaysia that's in Foundry, is Silterra, right? Which was formerly a government initiative. But I hope there's no Silterra people here. No, this in Taiwan, so it's safe. But Silterra is, although it's a foundry, but they are focusing on very big size chips, layman terms, very, very big size chips. And the technology are not a wow kind of technology. No offense to them. I mean, they are profitable, they are working, but not something I'm so wow about. So Foundry, Malaysia is out. Like, TSMC as a foundry, the biggest risk for a foundry business is the investment. It's huge. Huge. You take TSMC's latest investment into 3 nanometer foundry. It cost them $18 billion US. That's the foundry business. It is very, very high capex. So again, it's move to OSAT. OSAT Malaysia, we have 4 OSATs in Malaysia, right? We have Globetronics, OSAT. We have Inari, which is an OSAT. We have MPI, Malaysian Pacific Industries, and we have Unison. Okay, OSAT is an industry that I like. Okay, this is very interesting for me personally. 10 years ago, if you ask me, do I like OSAT, my answer is no. To me, my take is OSAT is the manufacturer. I mean, like, what's so great about packaging chips, right? Anybody can package. But what transpired over the last 10 years is the requirement for packaging or technology involved in packaging has gone very, very high. It has reached a stage where they are not just a pure manufacturer, but it's not easy to be an OSAT anymore at this stage. So if you look at last 10 years, do you realize that there are really not many new players that come into the market as OSAT? So it's really reached a stage where it's not easy. The barrier is already very high. And Malaysian OSAT is actually, we are ranked one of the world top 20 OSAT. MPI and Unisem Inari actually is ranked as one of the top 20 largest OSAT in this spec size. So again, it's something that I like because fabless model will not change. It's the new trend that people are moving towards fabless, meaning to say they don't manufacture. So as long as all the chip players are moving towards fabless design, they'll need the OSAT to actually support them in manufacturing. So I like the OSAT. Equipment, I like the higher end equipment, meaning to say I like machines in the foundry and machines in the OSAT. But again, as I mentioned, Malaysia, we don't have players in this space. You have global players there. So I like that space. No offense to local players. I think local players are great. I'm not saying they're bad, but as I said, after you start to really compare in terms of capabilities, it differs. Okay, now, have you ever wondered why people at Teradyne, they can reach multi-billion of revenue? Whereas in Malaysia, no offense to Vitrox, even Vitrox, you're in billion of ringgit revenue when you convert to just dollars. So what caused that gap? Okay. The biggest cause of that gap is the type of equipment that they produce. Okay. See, if you talk about machines for Teradyne, right? It's a one size fits all. I mean to say, if you are Intel, you want this production line, okay, I got this production line, buy, I sell to you. Right. So if then come TSMC, I also want a production line, I sell. So you have a standardized mass market machine that you can sell throughout the world and supported by your sales staff throughout the world. For Malaysia, most of our equipments are custom-made equipments by needs. So it is very dedicated to certain line. So it's not a machine that after you produce for this company, you can just replicate it and sell it. So that's the big difference between why most Malaysian play equipments, we are not able to reach that scale. Because ours are more custom-made type of machines. Whereas people like those Teradyne, they are mass market machines. So in the equipment space, I prefer the US guys. We don't have much. We have Malaysian, but not. I don't like it so much. Then come to precision. I like some precision company. I think that's, I said, precision and metal fabricating. These are the two industries. You're going to see a lot of new listings coming to the market. And I think these are very interesting. You may think that these companies, metal fabricators, what's so great about it, right? It's a hidden industry. Do you know the profit margin for fabricators are net profit are usually 20-30%? It's normal. It is not abnormal. It is normal. So although it's an industry we don't think so highly of, we say metal fabricators, but it's natural for the industry to be 20-30% margin. So again, this is a space I'll look at for innovation. Because these are the semicon value chain. If you move on to the EMS, again, we don't have components owners. Most we have is the EMS players. This is a big chunk of Malaysia. I like selected companies within the EMS. Okay, what is important for EMS companies is who are their customers and what products they're doing. Is their EMS doing a very low value product, the margin will be good for the EMS. But if the EMS are doing high margin products, then their margin will be good. So when you analyze EMS, they're all not the same, although they're all EMS. So what you have to focus on is what products they're doing, who are their customers. So EMS, like I said, I like EMS, but very selected to these two parameters, right? Their products and their clients. So sorry, it's a very long answer to your short question. So this, I hope, answer your question.
Okay, Peter, there's a question from Yimeng asking that do you foresee automotive industry will grow further and even catch up with the PC and computer industry? Automotive industry, will it catch up with the PC and computer?
There was this interesting statistic. I don't have it. It's my brain. It's from the World Semiconductor Association. They call IC something. I can't remember. So they actually split the projection of growth into 4 categories. One is of course for personal computers, one is for automotive, one is for data center, and one more is for IoT. Okay. Based on their projection, from now until 10 years later, so they give a 10 years projection, right? The highest growth of semicon will be in 2 categories: IoT, Internet of Things, and also automotive. So that is actually the forecast. Okay, if you look at where the growth trend is, again, it's a bit tricky. Do you want to measure it by volume or do you want to measure it by value? Again, you get very different numbers. But automotive is definitely a trend, next trend of growth. If you look at it, the demand for brain power, a better word, for automotive is increasing. And the trend is not going to reverse. You're going to expect more and more. I used to have this joke. I still remember in 2013, I was invited to give a talk for Mercedes. Right? That time it was a big, 2013, it was a big thing for Mercedes because they launched first E-Class that have an auto anti-collision. Mean to say, when the car front stop. And I remember that time, 2013, that Mercedes cost maybe 350,000. 2014. In 2017, 3 years later, Perodua Myvi have the same function, which cost 50,000. But that's technology, right? More and more demand about all these anti-collision and things like that. And it's going to your mass market cars. You know, like 3 years ago, you're only a merc of that price, but now it's going to mass market. Think about your Perodua now, or even your car. No, even a simple Perodua, there's multiple of we call it driver assisting functions or ADAS. Right? So more and more will actually come. So that's why automotive is a big driver of the industry. But on the other hand, as I mentioned, in terms of value is a different thing. Because automotive don't need the smallest chip you have in the market. That's why they don't need to pay a very high premium for the advanced chip that they're using. So on one hand, yes, they're using advanced chip, the growth is true. But on the other hand, if you measure by value, it may not be
just in case Dr. Everett call me
high value compared with
Lim Tze Cheng.
your handheld devices. Again, back to another interesting point. No, we keep talking about 3 nanometer chips, right? 5 nanometer chip, 10 nanometer chip. We keep saying that how capable TSMC is. That you look at in the whole world, you talk 5 nanometers, there's only TSMC and Samsung. It sounds a big thing, right? But no, it's interesting thing. If you measure it by sales value, if you just take not even 5 nanometer, you just take 10 nanometer and below. Do you know how much it represents in the world total semicon sales? Barely 12%. Barely 12%. So all this advanced chip you're talking about, right? Actually, it's not the bulk of the demand. They are advanced, no doubt.
The value, about the value, are they more than?
It's more, but the world is still dominated by the bigger size chips. So these are highly capable, high value, yes, but it's only basically 12% of global demand. So even assume the value is double, it's still back to 24%, assuming it's 24%. Rest, we still have a big chunk of it that actually, we call the legacy sizes. That's actually the bigger part of the semicon demand.
Question from the room? Okay, so there's a question asking the reason US banning all the US service support and chip export to China for less than 16 nanometer chips. How will this impact Apple and Foxconn and Tesla Gigafactory in China?
Actually, this is very tricky. As you pointed out very correctly, right? On one hand, US want to limit the number of technology that can go into China. But on the other hand, the biggest buyer are actually their own companies. So they are in it's a very tricky situation. As I mentioned, it's not something you can reverse overnight. Like I said, I'm not going to get anything from China. I'm going to get, it's not something you can do it overnight. And so I think they're caught in that kind of situation themselves. Like I said, on one hand, yes, I want to restrict the technology that goes into China, but on the other hand, it's my own company that actually needs those products or those technology coming out. So it is something that, again, it's not going to shift overnight, but it will take quite a very long process for it to happen. Take TSMC, for instance, right? As I mentioned, due to all these CHIPS Act, TSMC is going to put some plants in the US. But if you really go into detail, right, the plant that they're building in the US are the lower legacy products. The higher capability production line are still in China. We are not going to put that line in US because US are not able to handle it. So again, it's a very tricky situation. The act is out, the rules are out, but honestly, no one really figure out how to maneuver it around. Because ultimately, the one they're going to hit the most is US owned companies.
There's also a question from Ban asking that in view of the current economic cycle of inflation and the interest rate rising, that may lead to recession, which ultimately influence the ecosystems. How do you think, as an investor, one must approach this? What is your opinion?
Very good question. I got a few answers. First thing is, I think I'm the only odd one in the market. I am non-believer of recession. I don't think there will be a recession. No. To be more precise, I don't think there will be recession in the US. I don't think there will be recession in Malaysia. The only place where it's definitely a recession is Europe. In Europe is foregone conclusion it's going to be a recession. But I'm really not a believer of a recession in US or even in Malaysia. Right? The data has shown that US is still very risky. Okay, let's do it very simple. Even assuming US has gone through a 75 basis hike, right? Assuming December they follow through with a 50 basis hike, that will bring their interest rate to 4%, right? US average long-term interest rate, assuming the zero interest rate after 2008, 2009 is 5%. That is US long-term average interest rate. So even with all this massive hike of US interest rate, you're talking about only 4%, which is still below the long term. That explains why, see, despite all this aggressive hike, look at all the economic data came from the US across the board. It's still very strong. They're not really feeling the pinch out of it. That's number one. Number two, my take is inflation is definitely on the way down. The only issue is it's down slower than what people wanted, but it's definitely on the way down. That's a key thing you understand. So as interest rate continue to go down, that will actually provide room for 2023 for US to cease hiking interest rate. They may not cut interest rate, but it gives them room now to hike it any further and to maintain. Now, then your question will be, then why is it falling so? Why are the inflation falling so slow? See, for the fall in prices of commodities, raw materials, to follow through to the end product, it's never immediate. Price hike is always immediate, right? Today you see this one sugar go up, next day your teh tarik, kopi all go up. Immediate effect. But for price to come down, there is a 3 to 6 month lagging effect. Think about it. There's still inventories that these players are still producing or still have store that is on the old price, right? You still need to clear off all these old inventories which are at a higher price before your new product can factor in the lower price now. True? Normal business, right? So but on the price drop, there's always a 3 to 6 month lagging effect. So that's why you see, on one hand, why the commodity prices are falling so fast, but you're not seeing the end user price fall as fast. It's due to this 3 to 6 month effect. CPI peak at May, or most commodities price actually peak at May. So that means if you take that rule of thumb, you have to wait at least end of the year before you see a much sharper fall in the end product prices. So my take is inflation is definitely coming off, which will actually prevent the world from really having a risk of recession. Okay, now let's look at your question about how does it affect the semicon. See, every business has a cycle. It has a growth cycle, it has a slowdown cycle. No business will be spared from this. Even semicon. There's always a cycle. Expansion cycle, utilizing the expansion, expand again, expansion. So whenever expand, you have fast growth. When you start to use the capacity, then you plateau off, right? So there is a cycle. So semicon are not spared by a cycle. Whether there's a recession or there's no recession, semicon is bound to have a cycle. But what is more important for investors, if you ask yourself this question, will it happen a day when humanity just one fine day wake up from their bed and decided, I'm not going to use technology anymore. I'm going to use less Facebook. I'm going to just buy a very simple manual car. I don't need digital screen. Just give me the or traditional meter. I don't need auto braking. I don't need airbags. I don't need anything, right? I don't want to drive a car. No, I don't need a computer. I don't need an iPhone. I'm going back to buy the old banana Nokia, which can just press the number and down. Will this ever happen? I think the answer is so. Technology is cyclical. Will continue to be cyclical, but it will be a cyclical uptrend. So as the cycle moves up and down, in the long run, this will be uptrend. Until one day, Armageddon or a meteor hits the earth and wipe off all humanity, yeah, then everything will be. But until then, it is a cycle, but it's a cycle on uptrend.
Thank you, Peter. So there's a question on the Malaysia Offsite Company. Are they capable of doing 2.5D and 3D packaging?
Well, everybody's moving there. Look at it. Do recognize the fact most Malaysian players also have plants in China. They are not really focused in Malaysia. Okay, I'm not sure about Inari. I don't follow that closely, but I do follow MPI and Unicem. They both have plants in Chengdu, right, and which are actually quite capable. And to make into perspective, if you remember 2018, Unicem welcomed a new shareholder. I say welcome, which is Tianshui Huatian. Tianshui Huatian is actually one of the top OSAT in China. So technically, Unicem now is the largest shareholder of Unicem is actually a Chinese company.
Peter, there's another question from Yikai asking that what is your view on Intel IDM 2.0? Excited or not as an investor perspective?
You asked me at Intel. Okay, I have a view. I mean, I'm not saying this because I'm at Intel, right? But I have always this view. In fact, I do invest in Intel. Not me, sorry. I do invest. Okay, let me phrase it correctly. Some of my clients' portfolio do have investment in Intel. I think that's a better way to put it. Okay, this is very interesting part. So Intel comes with a lot of fire globally, right? Because if you look at measurement, I think Intel capability start at 10 nanometers. But it's arguable. Because it's technical. You guys are technical guys anyway. See, now the nanometer is measured only by the size. Previous is measured by the M2 pin, the pin distance, right? So the only guy that still used the historical measurement of nanometers is Intel. People like TSMC, Samsung have already abandoned the old measurement of nanometer, just measure it by size, not by the pin distances. Right? So what I'm trying to say is, although on paper, Intel's nano capabilities is at 10, but if the product performance, actually they're at 7. So they're not bad. But of course, Intel comes a lot of pressure. It's like, hey, no, you guys are not comparable to TSMC, right? Why do you still have your own fabrication? Why don't you move it to a fabless model like your NVIDIA or what, which is doing much well? Well, I have a very different view. I always like to look into the future. If you look at what's happening now, exactly what's happening now is all this fabrication are happening in Asia, all right? Which is a problem US is trying to solve. Whereas people like Intel, Texas Instruments, they have their own manufacturing capabilities. So they are, to a large extent, least affected by all this concern over having big reliance on manufacturing plants in Asia. You see I'm coming from? Okay, now that's the first aspect. Second, as the US will move to encourage building more capabilities in their own domestic territory. Let's take people like NVIDIA, for instance. Do you think it's still possible for people like NVIDIA to go into the foundry space? It's not possible. They are never in that space. Is it possible for people like Broadcom or Qualcomm to go into the foundry space? They can't. But whereas for Intel, despite all the bad performances, they still maintain involvement in the foundry. So they are still having in touch with the foundry exposure. So relatively, if you compare between people like the fabless and people like Intel, the ability to actually progress further into foundries, definitely Intel will have advantage. So my take is, on one hand, yes, I agree, fabless will still continue to be a trend. But given 5 to 10 years down the road, I think whoever still have a foundry, I think they will actually be benefiting in the long run. a very analogical comparison. Take the telco industry for instance. Remember in the 1990s, it was so hyped about the mobile space. So everybody think the new growth trend is going to be a mobile. So up till the very serious extent, in Malaysia, there is a demerger of telecom. Telecom used to have both the mobile division under Celcom and also the fixed line. The craze over mobile was so strong that Khazanah actually demerged telecom into two entities. The darling mobile and the boring fixed line. Fast forward, that was the year 2016. Fast forward after 2016, no, 2006, sorry. That was 2006, 2007. After 15 years, what's interesting? The mobile is the one that is dead. The fixed line is the one that is growing. So this is something like what I'm trying to say is between the fabless and those who still retain Foundry. Those who made Foundry may look boring, high capex, not sexy at the moment. But I do view that whoever, like a telco, had telecom don't demerge if you keep the wireless and the fixed line together. I think telecom will be a much more valuable company than what it is now, compared with the smart move to try to demerge it.
So we are going to take question. I think the max we're going to take is 11:30, and Peter need to rush for off to some meeting and back to KL. So one more question for you from Hui Chun is that how do the key criteria to decide which OSAT is worth investing? How about the key criteria to decide which is the worth to invest OSAT?
Okay. Honestly, I don't think there is a very big technological gap between the OSAT that you're seeing today. As I mentioned, look at it, even Malaysia, we're in the top 3 of the world 20 largest OSAT. So there's really not much big gap in what you can do and what I can't do in OSAT. Then it really boils down to, number one, again, I think whichever OSAT survive now, they will continue to only grow larger, simply because, as I mentioned, you won't see much new players coming to the market. And number two, the fabless trend will continue. Now, the only choice of deciding what OSAT to go to boils into a few criteria. Number one, who are their clients? Are they very reliant on a single country, or are they more diverse? Second, are they more reliant on a single customer? Like, there is one OSAT in Malaysia, which I can't name names, not so nice. 90% of their business come from one single customer. I think we all know who. But so that means if that customer were to have faced any problem, 90% of our profit is. So diversity of it. The third, we look at, of course, the breakdown of exposure. Are you more exposed to PC chips? Are you more exposed to automotive chips? And ultimately, the most important is valuation. I said, I don't think there'll be much capability differentiation, but it's really how much are you paying for it? That is this OSAT too overly priced, or this OSAT valuation is still more attractive?
Someone gives the guess in the chat. Do you want to say that now? Okay. So someone give a guess of the 90% concentration. Okay.
Not from me.
Okay. Yeah, there's no more question here in the chat. Anyone in the room?
With the chip app, the cost structure of doing foundry in the US way more still expensive.
Okay, my answer will sound a bit weird or hard to believe, but somehow, as weird as it seems, it's quite true. See, foundry is not labor intensive. Foundry is a very high technological labor. But why is it can't work in developed countries like US? Why are foundries more concentrated in this part of the world? It sounds weird, but imagine, right? Those people who are work in foundries, they are not your normal blue collar. These are all highly trained engineers, highly qualified engineers. They work in the foundry, no joke about it. So now imagine the mindset. If you go to the US, you ask this guy, highly trained engineers, to work inside a foundry, you have to wear a space suit 24 hours a day. They can't take it. You see, I'm coming from. They're like, hey, look, I'm a highly qualified engineer. You expect me to work in a foundry? No, right? The pay will be high, but it's that mindset, right? You expect them to wear that space suit and work 12 hours a day in the foundry. Hey. Whereas for Asia, no issue. As long as you pay me, I don't mind. Right? So that's why it's so hard to work in the US is more of this. Because Foundry is not a it's not a labor-intensive business, but it is the mindset. Number two, of course, in the more technical, that there is a technological know-how. See, you can buy a machine from ASML, you can buy a machine from Applied Materials. But what is critical in a foundry is, okay, not to produce a wafer, take months. Okay, why we call it integrated circuit? You know, okay, may not be engineering correct, but just a layman understanding, right? You use lithography to imprint layers and layers of circuit. After you imprint one layer of circuit, you go a treatment process. You print another layer of circuit, go a treatment process, and it can repeat up to 100 of layers, and the whole process really can take months. So, and after that wafer is completed, you need to do probing to test. And now this is the tricky part, the yield part. One wafer, depending on the sizes, take average, take 1,000 chips, ICs on the per wafer. Yield is where is the critical factor. After complete the whole process, how many of these 1,000 chips are working chips? How many fail? If you have a yield of 50%, mean to say, technically after complete the whole process, only 500 chips are in working condition. The other 500 chips. This is where the tricky part is. Okay, you remember last year, NVIDIA and Qualcomm pulled out of Samsung's 5 nanometer facility and shifted to TSMC. The problem was exactly the yield. Somehow Samsung, although it's capable of producing 5 nanometers, their yield are inferior compared with TSMC. Okay, now why this matters? Because initially assuming 1,000, you factor in your costing for 1,000. Then suddenly only 500 are working. Your cost actually double.
But it's not Samsung pay for that, right? Because this NVIDIA, they are only buying
No, but okay, you're buying, but one thing is the costing actually runs. But then second is your forecast, you're expecting to get 1,000 chip. But now you only delivered 500. I said this is not like immediate. Tomorrow I can top up another 500 chip from you. You wait for the whole cycle again.
But the cost is actually go back.
No, but the cost, you lose business. You will actually lose the business. And in the world, there's only two fellows who do 5 nanometers. That's the reason why you look at I think it was last year, 2021. NVIDIA and Qualcomm actually pulled out and shifted to TSMC. So yield is important. So it's not like I can buy the machine and do it. That know-how of running the machine, the whole production process is also a critical factor. So it's a very manufacturing thing. It's a very manufacturing thing.
Peter, there's a follow-up question for you, asking about how they can get the latest book from you.
If you are here, I have it here. You can go to my website. I think you go to.
I can share later. You just
share.
Yeah.
It's actually, you can go through my website. I have a website that actually sells the book.
So they say MPH, they get it for 80% and 10% discount for members. That is also okay, right? MPH.
MPH, actually, it's in Kinokuniya, it's in MPH, it's in Popular. Actually, most major bookstores have it.
Okay, Peter, for November 12th talk, can you give a preview on what you will cover?
Okay. Of course, I go for much deeper. For instance, have you ever think about it? What is actually driving semiconductors? What is actually, if you really think about it, right? All these semiconductor trends, what is actually driving it? Not even before autos, even before your personal computers. What is that thing that actually started all this semiconductor evolution? All this demand for higher data, higher chip, what actually causes it? It's a very interesting question. So I can give the answer now first, but not the explanation why. Whatever technological advancement we have started from a very boring industry, telcos. The telecommunication is the one that is driving all this. Sounds boring, but we will actually go through the evolution. That's number one. Then number two, I said in the book, I can't really write the pros and cons of even each value chain. We actually goes to what is the nature of business of each of the value chain of it. Then third, on the individual companies, again, in the book, we write publicly available information. I said, I'm going to get myself in trouble. But again, I don't comment about their business model, which again, I don't think is fair to write in black and white. But in the session, we actually talk more about the locally listed companies. What are their strengths? What are their weaknesses? What is it an exciting business model? Can this serve? Is it a business that's going to go for the long trend, or something that is really not sustainable? Which again, not so nice to put in black and white. So these are basically what we'll touch on that seminar.
Alright, it's the end of the sharing. If you like sharing like this, do check out the other Peter Lim sharing on his first book over here. We'll see you again on the next monthly book club sharing. Bye bye and happy learning!